Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for June 18th, 2024. Well, my goodness, we had a good rally yesterday with big tech just really stretching to the upside. We'll look at that in just a second. What was interesting is that we did it on relatively low volume, and our market breadth was very flat. So interesting day yesterday. So let's take a look at what happened overnight. Well, first off, we have Asian markets that were mostly up. Only Hong Kong just slightly lower last night after Australia holds their rates, and that seemed to bring in a little bit of bullishness overnight and probably reaction to the U.S. big rally on Monday. European markets are also looking a little bit higher. They have a nice little push to the upside, somewhere around 0.5% on the DAX, FTSE, and CAC, trying to move up here this morning. Again, likely a response to the U.S. market rally. If we take a look here at U.S. futures, however, we have the Dow futures just slightly lower, and S&P 500 is pretty much flat, with, of course, NASDAQ once again surging to the upside. Let's take a look at what's going on in oil. Oil had a really good day yesterday, pushing back up. If we take a look at XLE, had a nice little push back up, but this morning we're feeling a little bit of pressure here, and it is just a minor pressure, with oil down only 9 cents, Brent crude down just 13 cents, and natural gas looking up by just 1 penny here this morning. If we take a look at our precious metals, well, we have gold. Gold continuing to move on lower here today. Gold had a little bit of a rough day, but then rallied back at the end. We had silver trying to move up just a tiny little bit yesterday. That is gapping lower. And then if we look at copper, platinum, and palladium, they are all lower this morning as well. Taking a look at cryptos, our cryptos are pretty bearish here this morning, with Bitcoin down $1,266 a coin here at the moment, and red across the board on those cryptos. What could be the culprit there? Well, it might be the strengthening US dollar bouncing back up, trying to push higher, and we have our bonds moving up slightly this morning, with the 2-year bond up 4.77%. The 10-year is at 4.29%. and that 30-year is at 4.42%. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can figure out how we might want to approach the market for today. Remembering, we want to shake off that bias and look at the charts for what they are, not for what we want them to be. Well, first off, if you notice here in the diamonds, I've got this upside trend going on in here, and I've got this downside trend going on in here. We did bounce just prior to that, so we've got a little bit of a higher low, and now the stretch to the upside. The question is going to be, can we break that downside trend? Can we push up through some resistance levels here in the chart? So nice to have that good bounce yesterday, but I think the big question is, can we follow through today? I'm guessing it's going to be a bit on the data dependent side, whether that's going to be the case, and we'll talk about that in a moment. So first off, if the bulls can continue to follow through here, notice we've got some resistance right across here in that chart. We stopped right there yesterday. And what we need to see is if we can push on through, breaking that downtrend and pushing on up to retest this area where we've tried a couple, 3 times and rejected that area. So watch that closely here today. Pushing through there would probably give us that opportunity to move up and test this resistance area in the chart. If the bears, however, were to find inspiration today, what's the likelihood? Well, you'll notice there's a little bit of price support right across here. A push down into there would be a normal little resting pullback after a big push up like yesterday. If that were to fail, then I would suggest that possibility we could start slipping back down here to retest this area of support. Of course, if we slip through there, then I think our next area is the trend line. And of course, we know breaking that upside trend line would probably bring in a little bit of fear and another failure of the 50-day moving average would raise some concern here in the market. If we take a look at our SPY, no fear here in the SPY. It's just grip it and rip it to the upside. It's kind of amazing to me to just see how we can continue to chase these big tech giants higher, and there's no fear here on that at all. But we are stretching in a really big way to the upside. Any upside move creates a blue sky high. You get your guess is as good as mine is how far that blue sky can lift us to the upside. The only thing we can really look at here is if the bears were to engage, what would we be looking at? First level of support would be in here. Second area of support would be in here. Third area would be a gap fill down into here, and of course the trend here in the chart. And fourth area would be a possible break of the trend down into this stronger price support in the chart. So let's keep an eye on that. Our QQQ, and by the way, if we look at our moving averages, we are so stretched away from our 50-day moving average right now as we just continue to pile in to that tech sector. If we take a look at our QQQ, just ripping to the upside and gone absolutely parabolic here in the QQQ. There just doesn't seem to be anything that folks are not willing, any price that folks are not willing to pay for when it comes to these tech giants. So keep an eye on that. Blue sky above, and of course, any little hint of an upside pop brings in more blue sky. And well, how high it goes, that's up. There's no resistance up there. If, of course, we see those bears come into play, about the only areas we've got is a retest of yesterday's little low, this little support area right here. Pushing on down through there, I'm going to draw a second level in here, a third level right in here, fourth level filling that gap, and fifth level would be down here. Of course, remember, we've got our trend in here to be paying attention to as well. And we want to remind ourselves just how incredibly stretched away we are from our 50-day moving average. We are in a parabolic run to the upside. Reminds me a lot of 1999, when it didn't matter whether or not these companies were even selling their technology all that strongly here. We just kept buying. Now, we don't have that similar situation. They are selling technology, but how much stretch can we do? What is the upside price on this? And I don't know. It is just a remarkable thing to see the chase that's going on in the NASDAQ. If we take a look at IWM also on that bearish side, we had a good bullish day, bullish engulfing candle. But you can see we still have lots of pressures in here. For a continued upside move, I would look for a test of resistance up in here. Breaking through that resistance, we're going to start running into maybe some of this congestion area of the chart, and then of course right on up through there. If the bears were to find inspiration today, well, you can see it. Maybe a push down here to retest that low. Looks like a possibility. There is a little bit of an area right through here that we might test first. Well, we would test it first, but it could hold it right in there. And then, of course, beyond that point, we're probably looking down in this congestion area someplace, and then maybe on to test this trend line in the chart. If we take a look at our moving average here, well, we're still underneath our 50-day moving average, a failure of that area. Any rally back and a failure at this point would likely lead us to that possibility that we would seek out the 200-day moving average. Let's take a look at our VIX here. Right now, our VIX showing us little to no fear here. We did pop up yesterday, but little to no fear here. Still holding in there around that 12-13 handle area in the chart. No major concern. If I were to draw a trend line down through here, I don't see any worries as of yet that we're ready to break that downtrend. We're certainly testing, but no worries here at all. So it's going to be probably data dependent today, whether or not we're going to pop through or pull back on the VIX. But you can see in this market, no major concerns here. I do worry, however, that with everyone being so long this market, if we were to stumble, there's going to be a lot of folks hurt. And what I mean by that is when people start getting hurt, everyone runs for the exit all at the same time. And so if this does pop or break, it can break hard. So be prepared with a plan to protect yourself in case that were to occur. Not saying that it will, but just prepare yourself for that possibility. And then if we take a look at our T20s, our T21, 22, well, that helped us out yesterday. As you remember, I suggested that T21, 22, T21, 22 was likely in that bullish reversal zone and was likely to help us get some kind of a relief rally here on the day, and we did a nice relief rally. Picking back up, we got about 30% here in the chart. You will want to note that we haven't broken this downtrend yet. So if the bulls can find inspiration in here, well, you notice that we've got plenty of upside opportunity if the data gives them that opportunity to push up. If the bears, however, find that inspiration, well, we'll want to note that we have opened more opportunity to sell back off if those bears are so encouraged. So watch that closely. Move back up into here would not be out of the ordinary toward that 50% area here of the market. But as we have seen lately, it's either an all or nothing market. We're all racing in or we're all running for the door. So watch that carefully. Our T2108, I thought this was interesting yesterday with such a big surge to the upside. And this is probably the result of corporate buyback activity in those handful of tech giants making this occur. With such a big surge to the upside, you would have thought we would have seen a major increase in the percentage of stocks above the 40-day moving average. But no, that's not the case. Just a wiggle back to the upside here in the percentage of stocks above the 40-day. We are in a very strange market, something I have never ever seen before, where we have such a small amount of companies leading the markets higher. Everything else is struggling. Keep a close eye on that. I don't know what it means because, again, I don't think anyone's ever seen anything quite like this. Now, that being said, if we can continue to find bullish inspiration here, well, maybe we can break that resistance here in the chart, start pushing on up toward this downtrend, or even break through that downtrend. Keeping in mind, we've got a lot of work to do just to get back up here with more than 50% of the stocks above their 40-day moving average. If the bears were to find inspiration, well, you can see we still have the opportunity. We can go lower in this with more stocks pushing back. So we got a little support level down in here, but that takes us all the way down here to 20% of the stocks above our 40-day moving average. If we take a look at our T2107, very same situation here. We barely wiggled on the number of stocks getting above their 200-day moving average yesterday, which is odd considering such a big surge in prices in the market. And it really is showing us the dominance that those big tech giants have over the indexes. If we take a look at this, clearly still in a downtrend, we are just barely below the 50% area here. Stocks above their 200-day moving average. We could easily push back up through there and maybe work into testing that downtrend here in the chart. Breaking through that area, of course, would mean a pretty substantial recovery here on the market, so watch carefully for that possibility. And if the bears were to find inspiration, well, we know that there are certainly a lot more lows that could occur here in T2107. Breaking below here, I think, might raise a little bit of worry and concern, because then we're going to start working into these levels on down in T2107. If we take a look at our breadth, T2101, well, T2101, check that out. After such a big move to the upside yesterday, look at the breadth of the market. The breadth of the market actually declined. Man, it is tough to wrap my head around that. How we could move in such a big way in the market and have no breadth to really show for it. A little bit on the confusing side, and once again, I'm not sure we've ever seen something quite so disjointed as we see in this market currently. So watch that carefully today. If we take a look at our second here, there we go. If we can take a look at our economic calendar for today, well, this is what I've been talking about as data dependent. We've got retail sales. They're expecting retail sales to increase from 0.0 to 0.3. Now, this certainly is possible. They've got data that I certainly don't have, but it does seem a little bit interesting to me that we're suggesting this kind of increase in retail sales when last Friday we saw that the consumer sentiment had declined so sharply. They were expecting consumer sentiment to go up as well. So watch that closely. This could be an interesting number today. If we do come in strong on this, I would expect the market to celebrate and move to the upside. But boy, a miss in here could really take back a big portion of yesterday if we start to see those retail sales slipping. So watch those closely this morning. Then after that, we've got an industrial production number. Obviously, it is a market moving report as well. They are looking for industrial production to go into an increasing mode here as well. We'll see. Keep an eye on that. And then, of course, we've got business inventories that will be coming after that. They're looking for those business inventories to increase from a -1 to a 0.3 in there. So we'll watch that closely. After that, we've got a slew of bond speakers, or not bond speakers, Fed speakers, and a 20-year bond auction. We've got Goolsbee here this afternoon, and we've got a Treasury International Capital. Now remember, as you plan forward, everyone, we are going to go into the Juneteenth holiday and a shutdown here in the market in midweek. Kind of an odd circumstance here for us, but watch that carefully, because on Wednesday we're going to get the housing market index. Remember, a shutdown can create all kinds of weirdness in the market, so be prepared for that. Make sure you have a plan to protect yourself heading into that holiday. Then let's take a look at our earnings calendar here for today. Our earnings calendar, we do have a few more on that calendar for today. First off, just a really quick review. We had a Lazy Boy report last night. Good pop here in Lazy Boy. So big surge to the upside on that. And then let's take a look at Lennar. Lennar reported last night. And, well, a little bit of a go nowhere report there on Lennar. So this morning we've got CRMT, CarMart will be reporting. Keep an eye on that. Looks like this morning looking a little bit lower here on that one. We've got CGNT reporting this morning, trying to move a little bit higher. Nice little upside trend there. And the last one, PDCO, that I have for notables this morning. A little bit of pop, not much happening there just yet in that stock. I can't say that it has reported. Still, obviously, in a downtrend. And then after the bell, we have KBH, the only real notable here for this afternoon, some more housing. So watch that carefully today. Let's take a look at some stocks that could be setting up. But before we do that, everyone, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. Thank you so much to everyone who does take the time to do that. I know, and I say this every once in a while, it gets kind of monotonous writing a comment on a video that happens every day, but if you consider the time it takes for me to put these videos out, it does get a little bit monotonous doing that as well. So thank you so much for everyone who does take the time to do that. And thank you so much for the kind support to this channel. It honestly means the world to me. Let's take a look at some stocks that could be setting up. And remember, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market. And remember that as we're looking at these data points, the whip in this market and the extension in this market adds a little bit of additional risk. So make sure you have a plan to protect yourself as we slide into this Juneteenth holiday. Let's take a look at our US dollar here again. Our US dollar is showing a little bit of strength here this morning, trying to push on up. So let's keep an eye on that as we're trying to push higher here on today. In that, with those bond yields going up, there is maybe just a little fear about that retail sales number this morning. So let's keep a close eye on that as that happens. And if we continue to see that dollar surge to the upside today, then look for commodity prices like gold, silver, oil, things like that, move negatively as a result of the strengthening dollar. Of course, the opposite of that would be true as well. If the dollar falls, then I would be looking for that opportunity that we could see gold, silver, oil, things like that move to the upside on a declining dollar. Now, let's take a look at TLT. And TLT had a big substantial pullback yesterday with that dollar pulling back on the day, and we saw bonds easing just a little bit. Watch that closely here along this price support area. Once again, if we see the bonds continue to rise to the upside on concerns, and certainly retail sales could bring in a bit of an increase in those bond yields. Watch that carefully in here. If that holds that support, look for that next opportunity to the upside here in those bonds. You could even look at like BND. BND would be another one to be paying attention to. Looks like that's pulling back here in the pre-market. Very interesting. So watch that closely. If we find some support in here on BND, could be another place to look in here on a strengthening dollar. Let's take a look at a few other places here in the market. If we take a look at energy, certainly energy not looking so good here overall, been running in a downtrend, had a nice little pop yesterday, but it's going to be really, I think, kind of dependent on what happens in that dollar. What we're starting to see here is that confirmation that our economy is weakening because the oil is reacting to that, to the downside, saying demand from the consumers is dropping. So we'll want to watch that carefully here. If this is a clue, could be a clue to the market or a clue to the weakening consumer, that so far the rest of the market is kind of, well, in a big way ignoring. So watch that closely here in energy, and you could take a look at some of the stocks like ExxonMobil. You guys remember me talking about this being a short setup. Well, there you go. Beautiful short to the downside there. ConocoPhillips was a short to the downside. Beautiful move in there. Now, it is possible we could be reaching the end of those moves and catch a little bit of relief, but a little bit of relief back to the downtrend would not really change anything in the chart, but to set up the next opportunity for a short at the moment. So watch those closely. If we take a look at some of retail, this has been pretty remarkable here. Retail, even though we're seeing that consumer weakness in the market, we got retail moving to the upside here and moving pretty solidly to the upside. You can see Walmart putting in that nice little bullish pattern after breaking through up here. We've got blue sky highs above in Walmart, and continuing to see that surge to the upside. We're seeing Costco really stretching up here, and I don't know about you, but it's kind of like we saw a weakening consumer sentiment, but apparently they're buying up stuff like crazy in some of these retail places. So nice bullish pattern here on Costco and continuing to push to the upside. We saw TJ Maxx making that nice little consolidated pop out here, really stretching to the upside on TJ Maxx, and Ross Stores making a nice little push. If we take a look at Dollar Tree, the opposite is true. We popped up yesterday, but still in a downtrend in that chart. And Dollar General, some of those discount stores, not looking good at all. So interesting dynamics here in the market when it comes to retail. There's a few favorites and the rest not looking so good. Let's take a look at Target. Target pushed back up yesterday, but still in a downtrend, not looking so good. So completely opposite of what we're seeing in old Wally World out there. So watch that close. Let's take a look at a couple other areas here in the market. You guys know that I've really been kind of paying attention to 3M. 3M kind of resting after breaking through this resistance. Nice little consolidating move in here. I would be watching for that next opportunity for maybe that to push to the upside. Altria, after breaking the trend, really lost momentum here fast in that. Trying to find a little bit of support in here, but right now any rally back up would set up that opportunity for a short. Let's take a look at McDonald's. I don't know if you saw this article, but McDonald's abandoning its AI order taking system that they were testing with IBM. They're abandoning that. It's not working for them. A little bit too early. They did go on to say that, hey, they believe it's coming technology and they want to use it, but so far it's not working. Now that might give us a little bit of clue that the hype on AI might be a little bit too extended here. So watch this carefully on McDonald's. Still obviously in a downtrend, and if we were to continue to rest out here toward the trend, I'd look for that opportunity for a failure. Even if we rallied back into here, I'd look for that opportunity for a failure there in Mickey D's until we can break that downtrend. Let's take a look at old Disney. Disney had a nice little pop yesterday, popping up into this next little area of downtrend here. We're trying to sneak out from under this longer term downtrend and get something going here, and perhaps this new movie coming out, there's a huge anticipation on that it will perform really, really well. So watch carefully here in Disney. Now the question is, if the consumers are as weak as the CPI, or not the CPI, as the consumer sentiment would suggest, will they be able to take the family to the movies because of the cost of doing that? So watch that carefully here in Disney. Pretty interesting looking chart. Take a look at HBI. One of the members of RWO brought me this chart. I'm really liking the way HBI looks. Now this is a longer term trade, good dividend paying stock, so watch this carefully. Hanes Brands coming up As you can see, nice little consolidating move here on the weekly. I'm watching that closely for that opportunity for that to pop through on that longer term play. Worth keeping an eye on. And as you guys know, I'm been paying pretty close attention to PayPal here as well. But PayPal breaking that support and trend, couldn't break through that resistance in here just yet, so it's not ready for prime time just yet. Chewy is one that I am watching here pretty closely for a longer term. As you can see, we're back up here testing that big downtrend here in the chart, and you can see we're starting to rest and consolidate that a little bit. If we take a look at that at the daily, look how long we've been resting in this consolidating pattern. So I would be watching for that opportunity, maybe that this could pop through and maybe begin something there on Chewy. So watch that close if that can start coming around. Again, it's really going to kind of depend on what the strength of the consumer actually is here in the market. So with that, everyone, I want to wish you all a fantastic day. I want to wish you great results in your trading. Thanks so much for being here and supporting the channel. I truly, truly appreciate it. And as always, I wish you all the very, very best and hope you have a fantastic Juneteenth holiday as well. See you right back here bright and early Thursday morning. Take care, everyone.